What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw the SP 500 testing some very critical resistance, and so far we are getting a rejection from that zone. So first up, let's take a look at the SP 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today in SPY we were down 0.06%, and intraday we were breaking above that resistance at SPY 390, and we did test that critical resistance zone right around 393. So from these levels we have three critical resistance levels, which are 390, 393, and this gap fill just above 396, and you could see the negatively sloping 200 daily moving average is also coming down into this resistance zone. So this is going to be extremely critical bear market resistance, so you should be taking on less risk as we approach critical resistance because there is going to be a good chance we have sellers at those levels. Now as bulls, you can continue to stay bullish while we're above this risk level at 378, or you can up your risk level to be right around 386, which is going to be right around the 20 simple moving average and the 50 EMA. If we break below 386, we could come back down towards 380 and then 378. And if we lose that critical support, we'll be looking for the next leg lower at 371 and then 364. So you just need to continue to manage your risk, and keep in mind we did break out of the trading range to the upward direction because we did get that break above 386. So there is still the possibility the bulls are trying to fill the gap just above 396, and then we could see bears showing up at that negatively sloping 200 daily moving average. We have some huge catalysts this week with CPI data and bank earnings, so it is possible we just consolidate in this zone until later in the week, and then we see the next big volume move in the market, which could get us another breakout. So continue to stay objective and watch your critical resistance and your critical support zones, and just manage risk around those levels. Whether you're taking short trades or long trades, you should be just fine as long as you are managing your risk. Don't let any losing positions get too large, whether you're shorting or going long. That is always the same principle, and be disciplined on your entries and exits. So right now I think the most critical resistance is going to remain this zone between 390 and 393, and if we break through that, then we will be looking for that gap fill and possibly a test all the way up to about 400. On the NASDAQ 100 triple Qs, we are up 0.65% today, and intraday the triple Qs were looking like they were getting a bull breakout back over the 20 daily moving average, but you can see there was a very clear rejection from that negatively sloping 50 EMA, and the price action did close below a negatively sloping 20 daily moving average. So without a doubt, there were plenty of sellers up there at that resistance zone, which was right around 275, and we do have another critical resistance on the daily chart right around 273 to 274. So with this rejection on the daily chart, there is possibility the bears are going to try to follow through and drive the triple Qs back down lower. So you do need to manage your risk if you're long on the triple Qs right here at 267. Below 267, we'll be looking for a retest of 260, and if we break 260, we'll be going down to 254 and then 250. If we do get the bull breakout above 274 to 275, we will be looking for that next leg higher at 280 and the gap fill at 283. On the Dow Jones, we were down 0.29% today, and the Dow Jones did close the gap just below 338, and we're well on our way to the double bottom price target of 341. Now there's never a guarantee in the stock market, so there's no guarantee we're going to reach the price target at 341, so continue to manage your risk at the neckline breakout right around 334. If we start breaking down below 334, then we're coming back down to about 330 to 327. And if we lose all of that critical support, we'll likely make that next leg lower down here at 319.5. On the Russell 2000 IWM ETF, we are up 0.17% today, and IWM did close the gap just below 179, and we did get rejected from the bear market resistance trendline at 180. We closed back over the 50 EMA and back over the 20 daily moving average, but we're right up against very critical bear market resistance. The bulls need to break above 180 and then back over 182, and that will be enough to get us back over the 200 daily moving average, which will be a bullish breakout in the price action. In the event we see IWM breaking out above 182, we could run all the way back up to 188. Critical downside support is now 178 and 176, and you can stay bullish as long as we're above 176 because that was the breakout of the trading range. If we break down below 176, the critical support below that will be all the way down here at 172. On the ARKK ETF, we were up 4.59% today, and ARKK did get a bull breakout back over 32.5 and back over the 20 daily moving average, which means we can now go close the gap at 34.4. Above the gap fill, we still have strong resistance at 34.6, and then above that it will look like a bullish breakout, which could bring us all the way back up to 38. So look for that next possible strong resistance at that gap fill zone, with the critical downside support right here, right around 32.5, and the gap fill below at 31.68. On the VIX, we were up 3.88% today, and the VIX is still holding up above this support zone right around 21 to 20, so we are going to remain in a volatile market while the VIX is elevated above 20. The next volatile spike in the market will be if the VIX closes above 24, but overall this is still going to remain a volatile market while the VIX is still elevated above 20. On Bitcoin, we're currently trading right around 17,180, which is a bull breakout back over the 50 EMA, but we are still below critical resistance at 17,800. The bull breakout above 17,800 should bring us to that next leg higher at 19,000, and you can now stay bullish in Bitcoin while we're above 17,000 and the 20 daily moving average at 16,800. If we lose all of that support, we could be coming all the way back down to 16,000, so manage your risk around that support zone. On Amazon stock, we were up 1.49% today, and Amazon is starting to get this bull breakout above the resistance zone right around 86, but we now do have a gap to fill right around that support zone, so we should see a retest of that breakout as support before we go any higher. If the bulls can hold 86 as support, I expect to see a run all the way back up towards the low 90s. And if we can get the breakout above 94 to 96, that will be a bull breakout that tells us the bear market in Amazon stock could be ending. If we break down below support at 86, look for a retest of the previous low right around 81.8. On Microsoft stock, we were up 0.97% today, and Microsoft is still looking bearish with the bear trend and the price action below all of the moving averages. So if you're going long on Microsoft, you need to manage your risk right here at 225 or 222. If we break below those support levels, we could be coming all the way back down to 214. And then below 214, we will be looking for some type of capitulation event. If you're staying bullish above this critical risk level, you're looking for the gap fill to the upside just above 237, and that critical resistance zone is still up there at 242. On Nvidia stock, we were up 5.18% today, and Nvidia is back up to the extremely critical resistance level, which is right here at 156, which is also the negatively sloping 20 daily moving average. A bull breakout above resistance will bring us up to the next resistance bear market trend line, which is at 161. And then above that, we have strong resistance at 166. Downside support levels will now be 153, the gap close at 150, and this strong support zone right around 142. On Tesla stock, we were up 5.93% today, and Tesla did gap up and close the gap that we had right there at 120. So if you took that trade from 107 to 120, you should now be closing that trade out because we're at very critical resistance at 123. If we can break above 123, we should easily get to 138, and I do think that's going to be another strong resistance level that we should see a lot of high volume selling at. So you will want to consider locking more profits at that level if you take the trade above 123. Above 138, we'll be looking even more bullish for the next price target at 155 and then 167. We did gap up, so we now have a gap to fill to the downside at 114.39. So there is the possibility of getting rejected from 123 and then coming down and filling the gap. We still have strong weekly support at 107, and we're still seeing very high volume buying at these levels. So there is a very real possibility that Tesla stock is going to put a local bottom in at this level and then go on a very strong bull rally from these levels. So continue to manage your risk at 107, because if we break below that, the next leg low will be 94. On Apple stock, we were up 0.41% today, and Apple intraday came all the way up to the critical resistance at the negatively sloping 20 simple moving average at 133 and instantly found a rejection of sellers at that level and came all the way back down to support at 130. You can stay bullish on Apple as long as it's above 130 or manage your risk down here right around 125 to 126. But if we break through support, we will be looking for the weekly price target at 122. You can see we're still in a bear trend and we are getting rejected from negatively sloping moving averages, so there is the possibility we are trying to get to 122 in Apple stock. If we break 133, look for resistance at 135 and then right around 140. And if we can break through 140, we're likely ending the bear market in Apple stock and getting ready to run back up towards 150. On the financials, we were down 0.37% today, and the financials are building that bull trend, so you can stay bullish as long as we're above 34.6. The industrials were down 0.45% today, also building a bull trend, which means you should be bullish in the industrials as long as we're above 99. The healthcare sector was down 1.67% today, getting rejected from that negatively sloping 20 daily moving average and losing critical support at 134, which means we're likely coming all the way down to 131. The energy sector was down 0.35% today, getting rejected from that resistance at 88.6, but still above all of the moving averages, so we're likely going to fill the gap down here right around 86.4 before we go any higher. So jumping back over to the S&P 500, this is a very critical week because we have CPI data on Thursday and bank earnings on Friday. So you want to make sure you're managing your risk accordingly and get ready for a very large move in the market. I think there is a good chance for a bullish surprise, but as always, just make sure you're managing your risk whether you're taking short trades or long trades. You know your critical risk level is the resistance if you're shorting and the support if you're going long. And right now we are looking very neutral in SPY because we are still stuck in a larger trading range of going absolutely nowhere. If we start getting the bull breakout and ending the bear market, we're going to see SPY breaking out above 400, but we're not going to say the bear market is over until the price action proves it. So there's still a very good possibility the market is trying to put in a lower high before the next lower low. So if you're bullish on this market, manage your risk right there at support levels and instantly get risk off if we're losing support. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can learn how to join the Stocks Channel Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.